Vikash Mantri, Vice President of ICICI Securities, and Frank D'Souza, Leader Entertainment and Media Practice with PwC, they both join us and we'll take the story forward. Frank, morning. Let me kickstart the discussion with you. What is your sense? Do you think good days for media companies are back at a time when we are talking about a disruptive wave of digitization which could hit traditional mediums like TV? The commentary from Z is actually not bad.
Yeah, in fact, if you had a conversation with me about 18 months ago, and I would have had a different take on this, but you're right. I think the good days are back, and not only in India, but what we are seeing globally, despite the level at which disruption is affecting this industry, the growth has really been phenomenal. And a large part of that, and it is not playing out to that extent in India, but a large part of that is on account of the fact in terms of how consumers are taking to what I call non-linear mediums, so moving away from your cable television and newspapers and magazines and getting onto their devices to consume data and content. As I said, it is not to that extent. India is still fueled. The growth in advertising in India is still fueled by the growth that we are still witnessing as far as television is concerned. And I did hear and I corroborate the numbers that were spoken about earlier in terms of the pace at which internet advertising is growing as compared to television or the other linear mediums. But do recognize that the base of television and the other linear mediums is so huge that even a sub 10 or a 10% growth out there is a huge growth. Clearly, the fact remains that over a period of time, as the non-linear mediums, even in India, get a little more mature, you're going to find that the dollars are going to move from linear to non-linear, but the growth trajectory will still be there.
Only happy with your observation. But Vikash, just want to get you in on the discussion. What is the nature and the quality of ad spends? Is it largely from the usual FMCG, the big boys that are spending, and more so now towards the rural markets?
Okay, so if you look at HUL's commentary, they've clearly talked about an uptick in rural spends, and that is where most likely they are spending the advertising dollars. And HUL as a company has, for the last 4 quarters, upped its ad spends by more than 20% plus. So FMCG is definitely contributing to the ad spends. But clearly, this trend of HUL does not really match up to the trend which the print companies are showing. So if you look at the print companies, all of them have reported single-digit ad growth on a best case basis, and that remains a concern area, because if growth is happening in rural, why are the regional print mediums not getting growth? So we are seeing two things: not only the fact that FMCG is spending huge, but there is also spend largely limited to the broadcasting networks and not necessarily to all mediums other than digital. So digital is also getting its fair share, but I think the spends are trending more towards the broadcasting medium rather than the print medium, the way we see data as of now.
Encouraging to hear. Does that give broadcasters the muscle power to hike rates, you think, because how much of this ad spending increase translates into profitability?
Okay, so clearly over the last few years we have seen that most broadcasters have limited their inventory, tried to be in the norm of closer to the 12 minutes norm that has been at least discussed about in the past by the regulator, and you will see most of the large broadcasters managing inventory at 13 to 14%. So most of the growth that we see coming from broadcasting networks is largely due to addition of newer channels, which is the case for Z in some markets, but it is largely based on rate hikes. So it is both a function of largely getting rate yield hikes, and yes, of course, increasing market share in terms of viewership. So there will be some deviation in terms of performance of the broadcasting networks as well, but clearly for Z it has been on the better side of things. Clearly a good advertising means that these monies flow down to better profitability, and we've seen that case happening. But yes, to take the point forward, clearly this also means that investments into content, the need has gone up. So one cannot definitely put in all advertising dollars increase leading to improvement in profitability. There is significant investments that broadcasting networks also to needs to do, because they're also facing the challenge from the digital platforms that way.
Frank, how much of this pie gets divided between broadcast and digital platforms? Because, you know, with the onset of content creation content creation going digital, there is always that talk about how fast and strong the growth can be for digital advertising, and can it in any way eat into the allocation for broadcasters? Or is it really you know, something that works with, because broadcasters have their own digital platforms? Yeah. Sorry, I just wanted to add that bit.
That's right. So yeah, so how they then cross monetize is something that will be driven by strategy. Globally, we are finding, and clearly it's a trend, and if you look at data, consumers are rapidly moving on to digital platforms. Advertising dollars have not shifted with that same rapidity, because the whole aspect to do with how do you define effectiveness of advertising on non-linear platforms, I don't think it is coming out sufficiently as far as giving advertisers and advertising agencies enough comfort in terms of what is the efficacy of that. The other aspect that we need to keep in mind is that as the dollars start moving, we are going to see a greater level of efficiency coming in terms of ad spend. The fact is that you are going to narrowcast your advertising to the right consumer on the back of data, analytics, and technology. What that means is that at some point of time, not in the next 5 years at least in India, not in the next 7 years at least as far as India is concerned, you're going to see some tapering off in terms of the advertising spend, because what now an advertiser needs to spend to get to the right audience is going to cost him far less, given the fact that he knows who his audience is. And that's a trend that we need to be aware of over a period of time, in terms of you're going to see some level of plateauing before it picks up again. We see that happening in most of the developed markets, where analytics is being put to use and you get the right kind of advertising in front of the precise customer that you want to go to. Just reacting to one other comment which was made in terms of TV getting a larger share of advertising today, and which is true as compared to, say, for example, newspapers. But in my mind, even a 4% growth in newspaper is huge. India is one of the 10 largest newspaper markets in the world today. Despite that, where the global rate of growth in newspapers is in the negative, it is negative close to 2%. India, the fact that it's still growing by 4% is a huge achievement. So not only is it in the top 10 newspaper markets in the world, it is in the top 10 fastest growing newspaper markets in the world. So that in itself, that is able to hold out against the decline that you see in the rest of the world, I think that is commendable.
All right, gentlemen, appreciate your time and thank you for joining us.